Hi there, welcome to Grain TV. I'm Kevin McNew. It's Wednesday, September 7th, and it was a good day for a rally in the grain market. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, beans leading it to the upside, gaining 17 cents a bushel. Corn with a respectable 5 1/4 cent advance, closing above that 330 mark we've been talking about on Dees corn. And Chicago wheat trailing along with a 3 3/4 cent advance. First of all, let's talk about the wheat situation in Egypt. It continues to be dismal, to say the least. On Monday, the health minister there endorsed the no ergo fungus restriction that the ag minister had also stated they were going to impose. Today, Egypt rejected a Romanian cargo of wheat, 63,000 metric tons. And so that continues to stymie or stifle the wheat trade business, with Egypt being the #1 buyer of wheat in the world market. So that continues to be a negative underlying the wheat market. Other news out today was a little more positive, especially with soybean sales. We had a round of good soybean sales announced by USDA this morning, two different announcements, one of 220,000 metric tons to China, another of 264,000 metric tons to unknown destinations. But overall, that's a 480,000 metric ton day, and that got the soybean market off to a quick advance on the day. We'll take a look at the action in soybeans here in a second. The other news out today was from Stats Canada. They came out this morning with revised forecast for carryout for wheat and canola, and those numbers, while off from last year, were a little bit higher than what traders had been looking for. In wheat, traders had been looking for a carryout of about 4.29 million metric tons of wheat. That would be off from last year's 7.05, but instead of 4.29, Stats Canada threw a number of 5.17, so that was a little bit bearish. On canola, also a similar thing where canola stocks are going to be lower this year versus last year in Canada, but not as low as what traders have been looking for. Overall, canola stocks are pegged to be 2 million metric tons. That's off from 2.5 last year, but higher than 1.27 forecast by traders going into that report. Speaking of reports, we've got on Monday the next round of USDA's WASDE report, and specifically we'll be looking at crop production estimates. Obviously, there's been a lot of dialogue in the trade about what USDA will be throwing at us, and everyone is coming out with latest rounds of forecasts. This morning we had Landworth, the satellite imagery company associated with Thomson Reuters, say they look for 165 on corn yield, although I'm not sure I give much stock to that, because previously in July they forecasted corn yields at 159, so no one really, I think, is paying too much attention to the Landworth number. But LinnGroup, another sort of respected analyst out there, came out with a 171 yield for the overall U.S. average. Now, keep in mind, USDA's forecast in August was 175.1. So overall, we are still, seeing numbers that come in below USDA. And let's take a look specifically at what LinnGroup says in terms of yields by state, because I think this is really where the issue lies. If we look at the state-by-state comparisons here, in blue you have USDA's August estimate, in green you have LinnGroup's forecast, and you don't notice too much difference in the I states. Illinois and Indiana are coming along, or at least on par. LinnGroup and USDA are on par with each other. But when we get into the eastern corn belt, especially Indiana and Ohio, we see a great deal of discrepancy, and this is where the dialogue has been most of the year. We'll remember Pro Farmer found pretty bad yields, or at least subpar yields, in parts of that stretch of the country as well. So that really, I think, is going to be the issue in September. Will USDA actually find lower yields, or will they stick with high yields, is what most people, or what we saw in August report information. Let's switch gears and take a look at November soybean action. We had a very, very good shot out of the gate here. We've been trading pretty choppy, pretty low volatility, but coming into today's trade, we had a little bit of strength in the overnight session, and that just got going really strongly when we opened trade at 8:30 Central Time this morning. You can see we shot sharply higher. This is a 5-minute bar chart. from the grain hedge trading platform. You can see we got all the way up to 978.25 before chopping around. The good news is, while we didn't close at the high of the day, we came very close to getting back up to that 978 range. Now, longer term, we're very close to what might be the first level of resistance above us at 980. That's sort of where we traded back at the end of August, and so look for that 980 as a key point that we'll need to break through to keep this rally alive. Speaking of technical indicators, every morning at Grain Hedge we produce a technical indicator report that gives you some guidance on where we think the markets are going to go. This morning's report in November beans projected a 10-cent move going from 968 in the overnight trade up to a projection of 978, and you can see that today, in fact, we did get that kind of carry through in the trading action. So if you're interested in seeing that report, by all means visit us online at grainhedge.com. Sign up for a free demo. Not only will you get an access to our trading platform, but you'll also get these technical alerts in your email box every morning before the trade opens. As a Grain Hedge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.